Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And viewers, if you want to connect with us live, and then you can do that on the by writing to us on the number that is flashing on your screen and will flash throughout the show on the top of the screen. And you can also write to us on our X as well as Facebook pages. Tell us your name, the stock that you have invested in, and the time horizon you wish to stay invested in. We'll try to take as many queries as possible. So let's get started then. We do have our very special guest, Kunal as well as Rajesh are here with us to guide you better. And a lot of queries have already started pouring in. Let me take the first query, and this one is coming in from a viewer named Bala. And let me have your take, Kunal, on this one, because he wants your take on Amar Raja Batteries. That has been a bit under pressure in the recent while. If you can help him with a good entry price at the moment, can he go ahead and make a fresh purchase or wait for some more dips?
See, I would suggest that just wait out for some more time. I would not say wait out for dips, but in fact, wait out for a point when the stock confirms a volume breakout. Now, we've seen, that over the last, few months, when there is a sudden change of price action, the stock initially shows signs of a volume burst. Now, for example, over the last few days, we saw, stocks like Devyani International showing signs of a breakout. You saw Ease My Trip also going into a breakout mode, where the stock over the last few days had seen a very good volume jump up. So wait out for a point on a similar basis for a stock like Amar Raja Battery and Mobility, when the stock confirms a volume breakout. Now that could probably happen. So the stock is currently at 1158. Maybe if the stock breaks out that 1180 to 1200 mark, that could be the first point where you may expect a stock to get back into a turnaround mode. So it's always better to buy this on the first confirmation of a turnaround. That could be on the back of volume confirmation. So I would suggest that it's a very interesting chart, but I think wait out for a breakout just about that 1180 to 1200 mark, and that too on the back of much higher volumes.
Moving on I'll come to you, Rajesh. This is Satya who's written to us and wants to know about BEML as an investment opportunity. Wants a combination view. Wants to know what could be the stop loss for this particular counter, and also wants a long-term view. So I'll come to you, Rajesh, first. What's your view on this public sector undertaking?
Horizon, we are very bullish on this company because of the fact that it's one of the major defense players. It is into metro rail coaches also, it's into infrastructure also. So all these divisions are doing very well. Order book is very strong and the new orders is flowing in. And the way government's focus on defense and metro railways and all, I think the company is going to do well in the coming future. Maybe somebody holding for 12 to 18 months would be a good bet. For short term, I think Kunal would be a better person to give stop losses and all. But fundamentally, it's a very strong company. Somebody seeking an investment for a long term should go ahead and buy.
Come to you now. All these counters had run up quite a bit, and of course they did see their fair bit of correction also. I mean, this counter has corrected around 25% in the last 6 odd months. So what would be a good entry level for BEML, and also a stop loss, as Satya wants to know?
So I think, look at it this way, Ankita, that the stock was almost at 500, moved to 5,000 plus in a matter of, I think, 3-4 years or so. And then from 5,000, the stock has come back towards a correction just about that 3,800 levels or a shade below that mark. So I think it's been a fantastic uptrend for BEML. Now, one thing is certain, that you might not expect that the stock would deliver a same kind of a 10x return over the span of the next 2-3 years. So you have to be a lot more patient. I would still believe that it may not be it may not turn out to be a short-term trade, but it could actually turn out to be a very good long-term trade. But you have to be very patient over here. Looking at the charts, the setup so far, it looks like that the stock is just about hanging around the 200-day moving average and going through a time-wise consolidation. And especially after this 10x kind of a move over the last 2-3 years, there could be a possibility that the stock may consolidate for many quarters to come by. So your patience could be tested over here. It's a quality stock undoubtedly, and that's why you've seen the stock delivering excellent returns over the last 2-3 years. But if you're holding on to this stock, if you're okay holding on to the stock for the next 2-3 years plus, then I think it makes a lot of sense to buy at current levels as well as look to accumulate on dips.
That's the take coming in on BEML. We're moving on to the next one, and Kunal, I'm coming back to you because this query is from Narayanan from Tamil Nadu. Wants your take on two counters. One of them is Bandhan Bank Average price, buying price is 225 rupees. Any upward movement is expected in the near term because since he's at a big loss in this one. And the other query is that SBI cards average buy price is 780 rupees. Of late, this stock has been in the news as well. But how do you see the momentum going forward? Any upward momentum expected over here as well?
So I think just exactly how I mentioned for Amar Raja Battery and Mobility, that it's always better to buy these stocks when they are trending downwards, at a zone when there is a strong volume confirmation breakout. Now for Bandhan Bank, I think since the stock over the last 1 to 2 years, I think I've been seeing this, tracking the stock since 260 levels. When the stock had shown some sort of a surge of momentum, but post that the stock has shed almost 40%, 35-40% from that 260 odd mark, and it's still looking weak on the charts. I would believe that it doesn't make sense to buy the stock at current levels unless you see a volume backed up move. That could happen once the stock maybe crosses levels of 170, 175. So it's always better to buy the stock on confirmation on the upside. I would suggest that wait out for a point above 170, 175 mark if you're looking to average further for Bandhan Bank. SBI cards, on the other hand, I think could be an interesting play. The stock over the last few days has shown signs of that volume confirmation breakout. It's trying to near back again above its 200-day moving average, just about that 720, 730 range. So that's a stock which I think you can look to buy or add further at current levels also.
All right. Moving on, Rajesh, I'll come to you. We are talking about the stock of the day, Zomato. In fact, Padma Sivarao from Bangalore writes to us that he holds Zomato, 1,500 shares of Zomato at 60 rupees per share. He wants to know if it's wise to sell 500 shares and perhaps buy some other share to make profits, or there is no time constraint here, but wants to know if they can partially book profits in Zomato.
See, as we discussed some time back, that although the fundamentals are good, long-term prospects are good, but one should not expect the kind of returns it has given in the last 2 years, the kind of X return. So what I would suggest is when the valuations are overstretched and the competition heating up, it would be prudent to book a partial profit since you are sitting on a huge amount of profit. It would be prudent to book partial profit so that your remaining quantity becomes free and switch that money to some other stock.
All right, that's the take coming in on this particular stock. But the next query, Rajesh, is coming in from a viewer named Sundar Raman from Mumbai. Wants your take on Kansai Nerolac. Is this a good buy at current levels, maybe to stay invested for the next 3 years, given the competition in this paint industry? Rajesh, do you believe that this stock will be a good buy at these levels?
No doubt there is competition building up in this industry as a whole, with new players coming in, be it Grasim, be it Astral, be it JSW. Everybody is buying a pie of the entire space. But considering the fact that Kansai Nerolac valuations are very good, they have a niche segment, they cater to a niche segment. I think for a longer term horizon, maybe in the next 1.5 year, one can expect a return of 20-22% from the current market price. So the time is, if time is not a constraint, you can buy.
All right, moving on then. This is GT Rao from Visakhapatnam who says that I'm holding 200 shares of ITC. Now the split is effective from now, but shall he price balance at the current price of ITC or wait till ITC really opens in the market?
Is it for me?
Yeah, Rajesh.
See, ITC is a buy from our side since the level of 150, and this has been given so many times in your BNSN show too. So it's still a buy. The company is doing very well. Not only cigarette volume has increased, FMCG is doing well. They are moving big time into dairy business, cash positive balance sheet, debt free, giving out the good dividends. So it's one of the stock which should be there in your long-term portfolio. Sometimes due to market condition, you might see some amount of profit booking or the price going down, but don't consider that. Consider this as a long-term stock and keep in your portfolio. It's buy from our side.
All right, that's the call coming in on ITC. But the next query that I have, Kunal, is coming from Neman Deora. Yet again, two counters, wherein first up is Bharat Forge holding 25 shares, buy price is 1330 rupees, looking for a targets around 1400 and 1500. Are these reasonable targets to look out for Bharat Forge, and how is the structure looking like? And the next query is on Devyani International, the stock that you have been tracking. He's holding 400 shares, buy price is 205 rupees. His time horizon is for the next 3 to 6 months.
So yeah, I think I'll start off with Bharat Forge. Sixth consecutive month, if I'm not wrong, where the stock has shown a negative trend or a negative closing. I think 6 months back, the stock was almost at 1700 to 1800 zone, and it's now come back to that 1200, 1300 range. So which means that sooner or later, it's bound to be that the stock would probably see a short covering move or a move, where the stock might see a positive, price action, and that generally could result into almost 2 months or 3 months of engulfing of price action move. So I would believe that the risk reward is fairly attractive for traders could look at a buy on Bharat Forge, and if you're looking at this as even a shorter term time frame, say for the next 3 months or so, I think I would probably expect returns closer to 1400, 1450 mark as a range for Bharat Forge, in the very short term time frame. Same is the case with Devyani International. So as I was explaining earlier, for stocks like Devyani International, IRB Infra, Eastmite, Trip, etc., that many of these stocks have shown volume up move, and whenever we've seen volume breakouts happening for the stock, we've actually seen the stock getting into a very strong uptrending mode. My sense is that Devyani International should be good for at least 220 to 240 as a target range. I think if I'm not wrong, it's placed now just a shade below the 200 levels. But I believe potentially if the market just about gets back into a stable zone, I think the stock should be good for at least 220 to 240 over the very short term.
All right, with that, it's time for us to slip into a short break. You don't go anywhere. On the other side of break, we continue to take your queries. Stay tuned. Welcome back. You tune into Buy and Sell Now, where we are taking all of your queries, stock-related queries, and let's resume then with all the queries. Then we are coming to you, Rajesh. This is a query by, Ramamurthy. He's writing from Bahrain. He says that he has Happiest Minds, and he is sitting at a loss of almost 15% on Happiest Minds. He wants to switch to Infosys. Would that be a good bet? Is what he wants to know.
See, both are a good company, I would say, for long-term portfolio. But unfortunately, Happiest might have not done anything despite the fact that the fundamentals were strong management and all. And at this point of time, I think it would be prudent to switch to Infosys. Although both are good company, but Infosys has got better opportunities, I would say, and it might move faster than what Happiest Mind could do. Strong balance sheet of Infosys, strong management, having good order flow despite the fact that there was slowdown in the IT industry. And with 2 rate cuts behind us from Fed, I think the BFSI segment is going to go up because of discretionary spends going up. So one can switch to Infosys.
That's the advice coming in on Happiest Mind. But the next query that I have is coming in from Oman. And Kunal, if you can help, Pratiksha wants your view on PCBL. She's making a loss of 10% out here. Good time to average or continue to hold on or move up completely?
So I've been tracking the stock over the last 1.5 odd years, especially when the stock had confirmed a breakout just out in that 300 odd mark. I think if I'm not wrong, it moved towards the 550, 600 levels, and from there, the stock has gone back into a corrective phase. I think it's a very interesting chart. My sense is that the stock, looks very attractive from a longer term point of view. And again, I think in the similar line of what we were discussing earlier, that the stock has confirmed time and again on the long term charts of price volume breakouts. And when you typically see those kind of patterns, where the volumes inch up significantly high on the monthly charts, on the quarterly charts, that generally indicates that a major turnaround is in place for stocks. So PCBL is a stock which I would believe could fall into that category. Since the stock has corrected from those 550, 600 levels to 450 thereabouts, I think it's an attractive entry point for you. If you've bought at higher levels, I think it's a good point where you can look to start averaging. But just in case, if the market gets a bit more wobbly at, say over the next 1 to 3 months, there could be a potential drop of another 5% to 10% drop into the stock. So keep some powder dry. You can average at current levels, but keep some powder dry for maybe another 5% to 10% correction further for the stock, and keep on averaging further lower.
All right, that's PCBL on the chats. But Kunal, coming to you again, Sudhir is writing from Hyderabad. He says that he has purchased 3,000 shares of NTPC at 330 rupees. What would be the target for the next 3 months? What would be the target price for the next 3 months for NTPC?
See, again, a stock which very rarely goes into a sharp correction. And I think if I'm not wrong, this is the 4th month or starting of the 4th month of a potential correction for a stock like NTPC. But again, we've seen the stock doing exceptionally well over the last 2 years. From 2022 to 2024, the stock has moved from 100 to 450 plus mark. So I think after that, we're seeing for the first time the stock go into a correction. Generally, a 4th month correction turns out to be a good buying opportunity for the stock on the short-term basis or even on a swing basis. So my belief is that starting from current levels of 320, 330 thereabouts towards a dip of maybe another 3-5 percentage points from current levels. So 315 to 330 broadly could be a very good entry point for you if you're looking at this as even a swing trade for a stock like NTPC.
All right, that's the take coming in on NTPC. But the next query that I have, this query is coming in. Okay, Kunal, I have to take it from you because this one is from Deepak. He's just short-term trader holding shares of Axis Bank. Buy price is 1175 rupees and quantity is 5,000 shares. What's your take on this one, Kunal?
See, it's a tough one because Axis Bank has frankly been one of the few laggards from the private sector banking name. Now, the only comforting point when I look at the charts for Axis Bank is that the stock for the first time in the last, I think, many months is showing signs of a potential RSI divergence. But that could get confirmed only once the stock breaks past about the 1,085 to 1,100 range. So I would suggest to hold on to the stock since you've purchased at much higher levels. But I think above the breakout of 1,100 mark, keep that as a threshold on the spot levels is where you should look to add further, because that could confirm that the stock has completed a major RSI divergence and could be in for a swift up move. So 1100 zone could be a breakout point for Axis Bank. Above that is where I would look to accumulate or add further.
Right, Rajesh, I'll come to you then. This is Reshma Bhatia who's writing in. She says that she is holding Tata Consumers and in the past she's made profit on this stock. Currently, she holds 300 stocks since March 2024, and of course, she's now sitting on a loss of 17%. She wants to know if she should hold this for the next 1 to 2 years. For the long term, should she be holding it or should she now cash out?
Strong company, strong brand portfolio, acquired good brands like Tetley and all, and doing very well. The only problem is in the recent last 1 or 2 quarters, we have seen volume drop coming into entire FMCG space as such. And this volume drop can continue to for 1 more quarter too, because of several issues like inflationary pressure, high interest rate, lower consumer demand and all these things. But going forward with the kind of brand portfolio this company has, and the kind of balance sheet this company has, I think that this can give good returns. You can expect at least 15 to 20% return into 12 to 18 months. Continue holding.
That's the take coming in on Tata Consumers. But with this, viewers, we are completely timed out in this edition of Buy Now Sell Now. Thank you so much, Rajesh, as well as Kunal, for taking all the stock-related queries for our viewers. For today, we could not take many queries, but we promise that tomorrow we're going to be taking all your stock-related queries as we will be joining back at 11 a.m. But for now, it's a goodbye from me and Ankita and the entire team who put the show together. Thanks so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.